This latest Investment Association report tells me that 9.4 trillion is invested in our pensions, our ISAs and our investment portfolios. And 69% of that money is managed by people picking what stocks and bonds to hold, to sell and trade. And we know that in at least 8 out of 10 cases, you'd be much better off in a passive investment strategy, the exact opposite, which more or less just follows a basic stock index, like the FTSE here in the UK, or the S&P in the US, for example. Instead of somebody holding a crystal ball and trying to guess, time and predict where to invest, when to shift it all around, it just doesn't work in the overwhelming majority of cases. And there's another problem with active management. The excess fees on an active strategy can be anything from 1% to as much as 3% and sometimes more percent a year. And it tells me that around 64 billion each year is being taken off the top of our ISAs, pensions and investment portfolios right now by those expensive advisors and managers. Look, I don't mind spending a premium on a car or a holiday or on food, piece of art as an example, but when I'm buying the entire global equity market, and I'm doing that in the developed world and I'm repeating that in the emerging world, and at the same time tapping into pretty much every stock out there, including small cap and value cap companies, what's the one factor I'm interested in as an investor? It isn't the network or their investment committee or the annual paper statements. It's none of that. None of that interests me. It's cost. If the advisor works out of a fancy high-end office and they have a fleet of flagship offices, it should just pretty much show you that you're paying for it all, for popping in maybe once a year to collect your statements. On the investing piece, all I really care about is cost. And yes, I care a great deal about the actual investment allocation, and I care a great deal about the investment strategy. Of course I do, but cost is critical. Just 1% more every year can change your entire life. It could literally catapult into a completely different league. Just 1% more than necessary in cost rinses $3,000 every year from your £300,000 pension or ISA portfolio, and it sends it straight into the hands of the glossy network's bank account. Over 30 years without any compound growth, it's £90,000. But with that compound growth on the actual fund itself and on what you're saving, it's another £300,000 or thereabouts. Take it back. You don't need to give it away. It's your money. I talk about it in here. This is where I suppose, offer up a bit of a pitch. My name is Martin Wilcox and I've been actively helping clients. I've been working as a financial advisor and an investment advisor for like 30 years in various different roles. And my job, cutting through the noise, is to create wealth, protect wealth and pass wealth on down the bloodline. I'm a wealth manager. That's my job. In fact, it's not a job. It's more than that. It's who I am. And slowly but surely, I'm creating wealth for my own family, and I'm also creating wealth for a limited number of other families who typically have minimum balances at around 250 to 300,000. At the moment, if your advisor works for a bank, an insurance company or a financial network, you need to watch out. The bank staff even often move on. There's no longevity. Others don't offer any proper wealth management, holistic wealth management services. And insurance company agents work for the insurance company. If you have a glossy, expensive financial advisor operating out of a glossy network, I am almost certain you're paying way over the odds for your investment management. You're probably paying around 2.5% a year. That's for the advice, that's for the funds, it's for maybe a discretionary manager on top, maybe not. And trading costs that you might not always see, even with modern day reporting standards which have moved on. Most of the time, these staff and managers and advisors are picking funds out of fresh air and delivering substandard investment solutions that perform consistently in bottom quartiles. And don't take my word for it either. Check out the press. There's tons of it out there. One of the largest networks that sells its own funds has around 150 billion under management. And every time, without fail, that we see them in the press, nearly all of their funds are utterly woeful. And that's because they're not very good. And it's also because they cost too much. It's simple. The fund manager we deploy has around 5 times as much capital under management as the biggest UK financial network. Dimensional Funds has something like 600 billion under management now. And just because we manage 120 odd million of it for around 190 clients, it doesn't mean we're not regulated in exactly the same way as they are. On the contrary, we are. And you have exactly the same levels of protection appointing me and my private office to support you as you would through them. It's true that I want to disrupt this. Quite frankly, it's a scandal and it's been going on unnoticed. People, normal everyday people, are being fleeced. And if that's you, I have a message. I want to take you out of this 64 billion problem, this annual problem with excess fees being rinsed through your pension and investment accounts, and I want to give it back. And yes, it is absolutely the case that I would very much like to get our client numbers up from 190 to 500, which is our cap. And it's taken 15, 16, 17 years nearly now to put those 190 clients under our watch and care, onboarding at a rate of about 1 a month. And that's how it's always been. We've got about 300 spaces as it stands today. Around 190, getting on for 200 have been taken now. And the time has come to accelerate that process. Our operations are outsourced, which makes us lean. Our report writing is outsourced, which makes us efficient. Our only role is to focus on you. That's it. All of our attention is on you. Since Bulletproof retirement was officially, I'm struggling to get my words out all the way through this, officially launched on Amazon at the end of June, we've been onboarding at an increased rate of about 1 new client a week. So nothing groundbreaking by any stretch of the imagination, but it is certainly up from around 1 a month. And it means if the numbers continue to grow just like they are now, maybe, just maybe, within the next year, within the next 12 months, we could be oversubscribed. So, are you seriously going to stay with that overcharging network you're with? If you're happy paying 5, sometimes 6% in initial fees, if you're happy being pinned down with penalties for moving and being locked in for years on end, with ongoing fees of around 2.5% a year, covering the funds, the platform, the advisor's fee, and then management and other layers, and if you're happy being put into their substandard and costly investment funds that consistently underperform every time we look. In fact, where the overwhelming majority underperform. If you're happy with all of that, then we are probably not the right advisor for you. I am probably not the right advisor for you. But if it all sounds terrible, awful and concerning, then maybe we are. And if you think you're tied in and you can't move, please speak to me on that too, because it may well be the case that you aren't. That extra 1% or 1.5% or sometimes as much as 2% a year that you're giving away in excess costs covers the cost of unnecessary layers of fat cat directors and their flagship offices in high-end locations. You could have that money in your pot to spend on your family. So talk to us, talk to me about coming on board whilst we still have space. And let's start to claw back some of that £64 billion that you've been giving away, probably without even noticing. Request my pack today below. It's got everything you need to take the first steps. It's got my free guides, it's got my head to terms, it's got a link to my book, and it's got a link to my brochure, and it's also got a link to a non-cost consultation which can last from anything from 10 to 20 minutes to see if we could be a good match.